The second thing that happens during a high interest rate environment is the capacity crunch, which we are experiencing as brokers for our client, that borrowing capacity decreases by a lot. So the current interest rates offered by the bank are somewhere between 6.14 to 6.34, on the highest side. But APRA, which is the governing body for all the banks, Australian Prudential and Regulatory Authority, APRA dictates that the bank has to add a buffer of at least 3% on top of this when they're doing the calculations for the borrowing capacity. So even though your repayment on a $1 million loan, interest only, let's say, might only be $61,400 per year. This is interest only on a $1 million property or $1 million loan. APRA says that banks have to do the calculations based on 91,400 per year. So Australian banks want to keep a buffer in the repayments so that if the interest rates keep going up, it doesn't put the clients in a problem. So what is happening right now is a big capacity crunch, which is the borrowing capacity has gone down substantially. So this is where we as brokers come in and figure out ways, because this is 3% is what is dictated by APRA. This can be up to 4.5% depending on which bank. Plus there is living expenses based on HEM. So it doesn't matter what your living expenses are. HEM is an index used by banks to calculate if you are a single applicant on an income of 60,000, what will be your monthly expense. Same if you are a couple married and have 2 kids and are earning a combined income of 300,000, they say there is a minimum amount that you will spend. Whether you spend lower than that, it doesn't matter. If you spend higher than that, then they'll take the higher. But if you spend lower than that, they'll still take whatever the HEM is. So keeping all that in mind, your capacity to borrow goes down substantially. So as brokers, we have to find ways where we can increase your capacity. So things like, can we include negative gearing as add back? Can we find a lender who will, instead of taking only 70% of your rental income, will take 90% of your rental income? We have to find a lender who will only add 3% buffer. We have to find a lender who will, for example, take your commissions that you get quarterly or annually. Will they accept it? So we have to find ways by which we can increase your capacity by choosing the right bank, the right policy, the right way.